That's Mr. Craig Bolanos. He's the co-founder and wealth advisor at WestGen Wealth Advisors in Chicago. I think I got that right. Anyway, welcome to the show, Craig. What's going on, brother?
Hey, Scott, you're getting close on the title. I just hope that the president can get closer on trade because I need some clarity. Yesterday should have given me a rally. I mean, good PPI data followed by good CPI data followed the day before, jobless claims that came in under 220. Stocks deserve to go up from these levels. We just can't put 200% tariffs on wine.
Well, yeah. I mean, yeah. Look, It was maybe I don't know if it was a last gasp, but it was still sell the rallies, kind of let me get out of my stocks. I don't know what's going on, kind of a deal, right? Because you're right, and if you look at the broader picture too, Craig, he's gotten good CPI and PPI numbers, right? He's gotten good energy numbers. They're coming down, right? Doge is doing a great job. A lot of what he ran on is coming to fruition. But it's not coming through when it comes to the overall equity market because they think that they want some clarity. Maybe they'll get it. But I think the only place that I would give him some serious criticism is during that joint Congress speech that he gave. Not they don't call it a State of the Union anymore. But anyway, he did a great job of showing all the ridiculous spending that Doge had found, and he went through a litany of dumb things, right? But he could have also said. And here's what other countries are charging their people for our products abroad. The 250% higher in ice cream or 50% higher for American whiskeys. He should have gone down the list of how our quote-unquote friends who want us to defend them in times of strife are ripping us off and keeping all of our products that they sell in their own countries at really, really high levels anyway. So he's just trying to get it back to a fair playing ground, and he's been talking about that for 40 years. I don't know why he didn't take the opportunity to let everybody know how much we're getting ripped off in Canada, Mexico, Europe, and Asia, but he didn't. So I think that it's slowly but surely starting to come out. But people need to know. I mean, I lived in London for 16 years. You try getting a glass of Maker's Mark over there and see how much it costs you, or a cigar, it's taxed to the hilt. So I've seen it firsthand, but I think he just needs to do a little bit better job of messaging so that everybody knows that this is ultimately will be worth it.
Are you applying for a new job as a speechwriter, Scott?
No, I'm not. No, because I don't think they can read crayon. But I think that
you're probably right. They can't read crayon. No, and that might be a fair criticism because I think when you look back at the joint session address to Congress, the most educational part for a lot of people that actually had the most interest when you pay attention to that stuff was the listing of items that was being uncovered. So correct, it would have been incredibly informative to show what occurs to educate on, tit for tat, different things that are happening. But it doesn't change the fact that the finger is pointing as people are seeing their 401ks decline, IRAs decline, although let's be honest, it's not that bad. A 10% correction happens every 12 to 14 months. So engineering 10% in the S&P from top to bottom, 14% in the NASDAQ, it is by no means financial Armageddon, and I think people just need to recognize that. I think people are so worked up. Scott, I will tell you, as a wealth advisor, there are a lot of people that are more worked up, and people are surprised when they hear their portfolio is break even for the year, off 1%. They can't believe it, but that's because foreign stocks are rallying, bonds are rallying, high-quality U.S. value stocks have hung in there well. It's just some of the tech and other components that have taken it in the chin.
I'm just looking at a quick chart here, just playing around while you're talking, and if you think that your hair's on fire right now, you should have felt that way last September or August when we were last at these levels. You know what I mean? You've only gone back to last summer basically. Year to date, the S&P's down 6%. Big deal. But you know what? We've conditioned people to think that your portfolio is supposed to be up 22% every year. That's the problem.
No, you're right. Recency bias is a very true cognitive element that we all need to fight against. Recency bias, that concept of what happened recently is going to repeat itself. And you're right, after back-to-back years of 23 and 24, people are used to the juice. And when you go back further than that, you think of the gains that happened in 2019, in 2020, in 2021, people are used to the juice. So I think there's some degree of reconditioning that we all need to do to take a look at what long-term returns are, and long-term returns are less than that through which we've enjoyed lately. But that's the reason people just need to change the lens, have some pragmatic optimism into 2025, and diversify their diversifiers, and they're going to be okay.
I agree. All right, always good to have a level-headed money manager on. Appreciate you starting your Friday with us. Thank you very much, Craig. Craig Bolanos, he's the co-founder, and wealth advisor at VestGen Wealth Advisors in Chicago. We're going to go away. We're going to pay some bills. We got a couple of texts. We want to hear what you have to say. Text us, folks, or call us. That's another good one, too. 855-776-6147. All right, we're going to go away, pay some bills. We'll be right back after this.
For the best in cattle industry information and